RightCapital's life insurance analysis, found within the insurance module of each and every client plan, is a valuable tool that assists you in discussing insurance needs with your clients. Within joint households, the life insurance analysis considers the question, what if the client or co-client were to pass away 1 year from now? In this training video, we'll take a deep dive into the life insurance analysis for joint plans, reviewing key terms to know in addition to pro tips and best practices for each of the 4 subtabs. Near the end of the video, we'll also review the life insurance analysis for single clients. First, let's look at the analysis for a joint household. Within joint plans, the life insurance analysis will run a set of side-by-side projections, one for the client and another for the co-client. Each projection is simulating a very specific what-if scenario. If the client or co-client passes away next year, will the surviving client run out of money before the end of their plan? Each projection considers the surviving client's remaining income and investments to determine whether or not they can make it to their planning horizon without running out of assets. The projections within the life insurance analysis include all of the same plan variables as the retirement analysis, with the following adjustments. Any income, savings, expenses, or goals associated with the deceased are removed from the surviving client's projections. Any existing insurance that would be paid out is included, and the death benefit received will be assumed to be invested with the same asset allocation as their other investments. Living expenses for the surviving client will also be reduced by a specific percentage. The percentage reduction is based on the expense adjustment upon the death of a co-client setting, which you can find in the gear icon, Security, Other Assumptions tab. Additionally, you can customize what percentage of each account type that a surviving client will inherit within the Account Assumptions area of the plan settings. Please be aware that this will have an impact on the retirement and estate analyses, in addition to the life insurance analysis. Pivoting back into the life insurance analysis, the summary area provides clean, easy-to-understand visuals that allow you to compare the estimated protection need to any current or proposed insurance coverage. The protection need reflects the amount of insurance that, if added to the surviving client's assets at the end of the first projection year, would ensure that the client does not run out of money before the end of their plan. Current insurance reflects any insurance entered into the net worth section of the client profile, where the indicated client is the insured. Proposed insurance represents any insurance entered in the proposed additional life insurance field within the action items below the graph. It's worth clarifying that the protection need being calculated is not an exact amount of recommended coverage for each client. Rather, it's the minimum death benefit required to ensure that the client ends their life with at least $1 left in invested assets. It's also important to remember that the projection need is an estimate based on the assumed plan variables for each projection. Fine-tuning income, expenses, goals, and other inputs for each surviving client is a critical step in performing an accurate life insurance analysis. Using the action items at the bottom of the page, you can individually adjust plan variables and immediately see the impact of your changes on a client's protection need. If you're familiar with the action items in the retirement analysis module, the functionality in the life insurance analysis is very similar. The inputs and values entered into the profile will be used as the baseline information for each insurance analysis. Use the slider bars or manually enter new values for each item, and then click the refresh button in the lower right to update the analysis. Any proposed action items that have been added in the retirement analysis area will also appear in the life insurance analysis. These items will be marked by a green dot for easy identification. The visible action items can also be customized by clicking the Edit button in the lower right, and then checking or unchecking inputs in the Add or Remove Action Items area. Much of the time, income, expenses, savings, and goals are entered into the profile with the expectation that both clients will make it to the end of the plan projections. However, in the event of a premature death, many of these variables would likely change for the surviving client. For this reason, it's essential to review the action items to make sure that the protection need being calculated is based on sound data, For example, if someone's spouse were to pass away prematurely, perhaps the surviving client would no longer pay for a child's college education. You can account for this by adding the college goal to the action items and then adjusting the cost in either scenario to see the impact. As a final note, any changes made to the action items in the life insurance module will only impact the insurance projections. These changes will not impact the current or proposed plans in the retirement analysis section or any other screen within Right Capital. The two tabs that are labeled as the client's name and the co-client's name will shine a spotlight on income and invested assets over the course of each projection. The tab labeled as the client's name illustrates the scenario in which the client passes away and the co-client survives. Conversely, the tab labeled with the co-client's name illustrates the scenario in which the co-client passes away and the client survives. The income charts reflect the projected income in retirement for each scenario, broken down by income type. Any shortage is shown in red, and the total shortage is displayed to the right of the chart. If the total of the client's current and proposed insurance exceeds the protection need, you'll see no income shortage. Do note that this projection will include any proposed additional insurance that you've entered within the action items. You can also use the drop-down box to display a chart showing the surviving client's projected invested assets through retirement. The chart displayed in blue shows the projection before including any proposed additional insurance, and the chart in green shows the projections after including proposed coverage. Last but not least, the Details tab is where you can find and analyze full cash flow details for each of the scenarios being projected in the life insurance analysis. Here, you can view year-to-year cash inflows and outflows, ending account balances, and more. You can use the drop-down box in the upper right-hand corner to switch between each scenario. You can also choose between a number of different cash flow tables. Once again, if you're familiar with the cash flows in the retirement area, you'll most likely be familiar with what you see here. The cash flow summary highlights cash inflows, cash outflows, and net flows for each year of the projections. The ending account balance table illustrates end-of-year balances for each type of account. Addition to accounts displays all employee and employer contributions to each type of account. Required minimum distribution reflects the required distribution of assets from tax-deferred accounts when the client reaches RMD age. Withdrawal from accounts reflects withdrawals from each account type to fund cash flow needs. And the net cash flows reflects the total of additions, RMDs, and withdrawals for each account type. The changes that you've made within the life insurance action items will be reflected in these cash flow tables. Columns with underlined headers can be clicked into to zoom into the table and view more detailed cash flow information. That covers it for our overview of the life insurance analysis for joint households. To wrap things up, let's take a quick look at a life insurance analysis for a single client household without a co-client. If you're planning for a single client, the life insurance analysis will function a bit differently. Because there's no surviving clients to plan for, we'll instead calculate a protection need based on specific goals and expenses within the plan. This is a simplified version of the joint life insurance analysis, primarily focused on providing for a client's children and/or grandchildren. The protection need in this case will be comprised of any college goals plus a monthly expense number that you can set for a specific dollar amount and duration. It will also factor in how a client's investments can help meet those needs, discounting the protection need by the rate of return on the client's current portfolio. The protection need can then be compared to a client's current life insurance coverage as well as any proposed additional coverage. For more information on RightCapital's life insurance analysis, please feel free to utilize the educational resources within our Help Center or to reach out to our advisor support team for more details.